As the Tesla stock price continues to struggle to make any real gains, and with the growing strength of the competition in the EV space, a lot of critics have quickly begun to lose faith in the future of the stock price. But what if we told you that getting a hold of 45 Tesla shares right now might be your key to a financially free future? Well, if you need an answer, then this video is the perfect one for you. Judging by some recent developments and events within Tesla that we will be exploring in today's video, stocking up on Tesla stock could help you retire early and have a solid financial future. Before we get into it though, don't forget to subscribe and turn on notifications by ringing that bell if you're new here, so that way you'll never miss out on any of our latest updates on Tesla's stock price. Without wasting any more time, let's get on with the video. Over time, we've come to realize that retirement is relative. Some people want to retire young, while others want to go on as long as they can. On a different note, it's believed that an average person should be able to comfortably retire with $1.5 million. As much as this sounds like a really huge sum, some people would actually consider it a miserable amount of money to settle with. Whatever camp you belong to though, it's certain that your retirement and how you do it is basically a game of numbers. So speaking of numbers, we're going to kick things off with what experts have had to say about the future of Tesla stock, and the numbers that we have been told to expect. It's worth mentioning that while some analysts have remained bearish on the Tesla stock price, there are others that are looking at the bigger picture and have a very optimistic view on the stock. According to an analysis of Wall Street Investor, despite the current performance of Tesla stock and the stock price, it could actually end the year at around $900 or $950. They also say that by 2023 and 24, the Tesla stock price will have completely kissed goodbye to anything below the $1,000 mark. To understand how optimistic analysts are about the future of Tesla stock, you may be shocked at the 5-year forecast for the Tesla stock price. These analysts believe that Tesla stock will go just over $2,500 by June of 2027. Based on what all these guys have had to say about the price of Tesla stock over the next 5 years, it's safe to say that Tesla could actually hit and surpass the $3,000 mark. Considering the current price of Tesla stock, even if they do manage to pull off what experts claim, the margin of profit for investors is going to be beyond amazing. For example, if you purchase 45 shares of Tesla at its current price, which is currently around approximately $800, you're going to be spending a little over $36,000 in total. Here is where it gets interesting though. Going by everything that the analysis have said so far, your 45 blocks of Tesla stock could be worth over $135,000 in just 5 to 8 years of holding the stock. That's a huge profit margin of nearly $100,000. In summary, you can increase your chances of retiring and staying financially solid by simply buying as much Tesla stock as you can. Furthermore, with the 45 shares, you've also got a bit of leverage. Whenever the price goes down, you can always acquire more, and if the price begins to hit its record highs, you can sell and still make major profits. Depending on your age and how many years of active duty you've got left, holding Tesla shares for the next 15 to 20 years could be a life-changing decision. Considering the plans that the company and its CEO have started putting into motion, we can only expect to see even crazier things as technology continues to evolve. With all that being said though, let's explore a few things that the company has in store that could greatly affect the Tesla stock price. First off, in keeping with its brand promise to increase production this year and to meet the high demand for its already available vehicles, Tesla is putting even more effort and investment into its scaling production. According to a recent release by the company, Tesla's capital expenditure is now looking to go from a forecast of between $5 and $7 billion that was made in April 2022 to between $6 and $8 billion. Based on a new securities filing by the company, Tesla may be spending as much as $8 billion more to increase the size and productivity of its factories, developing new and more sustainable batteries, and of course, to fund other projects. Speaking of factories, most people believe that the main target for this new expenditure could actually be the Tesla gigafactories in Berlin and Texas. Musk once described them as money furnaces, claiming that they were costing the company a lot more money without giving enough in return. With that in mind though, it would make more sense for the company to invest as much as possible in getting these two massive factories to their maximum productivity to maximize the company's profits. The benefits of such a massive investment in production could actually be a huge game changer for the company in the long run. Firstly, higher production from all of its factories is going to help reduce the cost per unit of each vehicle. thereby allowing the company to make more money from each sale. Another factor to consider is that the company still has other products in the pipeline for the next couple of years. And once they've got the production side on lockdown, all the delays that have been experienced so far can be struck off the list of things to worry about. There's no doubt that Tesla's huge investment in ramping up its production numbers is a move that will have a long-lasting benefit on the finances of the company. As soon as Tesla sorts out its production challenges, it's going to significantly boost its earnings, hence the price of the stock. Anyone holding onto at least 45 Tesla shares by the time these benefits start to show up could become very wealthy. While we're still on the subject of Tesla's electric vehicles, we should also talk about the possible V4 supercharger that may be in the works at Tesla. While there's been no public confirmation of what Tesla's got planned for the V4 superchargers, leaked project blueprints show that the new superchargers may be coming in with an all-new design. But more than just a new outlook, most people believe that this new design change could be a bid to accommodate a combined charging system. That is, allowing EV brands to use Tesla's already amazingly efficient charging network. The CCS support feature is already running in 16 countries in Europe, and the company has benefited quite a lot from this system. With the new superchargers being rumored to be coming to the US, this would mean that even more brands are going to have to submit to the Tesla system, which in turn is going to make more money for the company and extend its reaches far beyond just EVs. It's a brilliant plan of first designing an efficient system and then having others glean from it. And it's soon going to pay off for the company and also boost its stock price. This particular topic is an important part of this conversation, as it shows even more that Tesla is constantly looking to play the long game with its development rather than just repairing temporary short-term benefits. If you're looking to be financially free after retirement, then playing the long game is the way to go. Holding 45 or more Tesla shares for the next few years, say 10 to 15, might actually be the key to making it happen. Finally, before we go, you might just want to watch out for Tesla in the energy space too. In April 2022, Tesla launched a huge megapack project that contained 360 megawatt hours of energy storage capacity running together with a solar farm. According to Tesla, this setup could power 60,000 homes. This project was completed in partnership with Arivon, and the company is gradually growing into Tesla's biggest partner in the energy storage space. This project, situated in Boulder City, Nevada, was made up of more than 500,000 solar panels, while Tesla is backing them up with 360 megawatt hours of megapacks that are going to help to utilize all the solar energy being generated. Tesla claims that the project will generate 500 megawatt hours yearly for 60,000 homes, thereby getting rid of 400,000 tons of carbon dioxide emissions per year. This has now become one of Tesla's largest megapack projects in the world, and it's just one of the many projects that are being planned with Arivon. Interestingly, Tesla's already started working on a new megafactory in California that's supposed to help ramp up the production of its megapacks. At this rate of growth and production in the sustainable energy space, Tesla could develop a monopoly on the energy space before any form of competition even begins to get going. And just like it did with EVs, we expect to see mind-blowing results from Tesla's foray into the energy space too. So take a second to imagine just spending $36,000 to $37,000 on share right now, and having that figure 10 or 20 times within the next few years. There's no doubt that the Tesla stock has a bright future, so you've got to keep in mind that investing is risky, and nothing guarantees that a stock price will rise. Be careful, and make sure that you do your own research and talk to a financial advisor if you think you need some help. Do you think you could retire by holding Tesla stock for the next couple of years? Be sure to leave your comments down below and let us know what you think is going to happen to the stock price. While you're here, don't forget to subscribe and turn on post notifications for more videos. We'll catch you in the next one.